Welcome to TradeTheMBI.com. This is John. This report is for the 1st of September, and we're a little bit more of the same. We were expecting softness within this DSC spread configuration here. It just expresses a little bit of weakness, but we have the green, if I can get that up there, EBM, for the Dow right here. I'm starting in a little reverse order. If we go to the NQ, you can see the new shakeout, which has been converted even though it's under the same name. Once it gets positive and starts to move in the right direction, you get the green filtering. What it's going to do, though, is it's going to incorporate more with what the DOC readings are, whether you're below the red line, which is bullish. It'll start to convert based on that. Now, the NQ has been stronger than all the other markets. In fact, held up nicely under the softness from the other day and just played right around the EBMs. We can see pre-market we're already up slightly. And if we go to the ES, it's been in a trail off here of the shakeout for quite some time. So we expected that while we were suffering under some of that strain, all it was doing was resetting everything and getting oversold. As you can see, we've already moved down all the way on the Omega here, below -13. And in that particular case, we have reached an oversold. So it's just a matter of waiting for that shakeout turnaround. That could happen at any time at this particular point. So all in all, right within our expectations of where the market should be in that gyration. In fact, it was beautiful to give that Skype call on the short as well as put it on the video for the end of the month, which was a beautiful short run, and then I showed the turn as it took place, and so that was nice to do that in a live action setup. Oil weakness is obviously going to still put some consternation. It was no surprise. I mean, we had this huge move down, bought back up. Positive extremes that happened were filled in most of the way. We had another couple ones that happened in the middle of the run. Those have now been filled. So from that standpoint, this is now just about the market dynamic of, we've already see that we're below the red line here. So there's going to be a little more strain with that. And there's just no equilibrium at this particular point because the amount of supply can adjust instantly. Gold seeing nothing because there's really no strain in the world at this particular point. And TLT again, there's just nothing you can do with that. It's pretty much tapped out. Euro under pressure because obviously even with the US growth being almost nothing, the EU is probably going to be pretty close to the same. So no real strength in the euro from that standpoint. Now, this is always good. This is the new buy-sell test 3. And all these numbers are indicating up here are just closes above the long algo, and it starts to counter. And so number 2 shows up because this one was below it, and then it starts back at a 1. It's the close above, so these all stay 1. As soon as it dips back below, starts over again. And it's when you would have, like in this particular case, 3 bars ago, you had a close above the long algo, and in this particular case, again, comes in. You can see those by the asterisk. Now, you'll see these other asterisks, but they don't qualify because they didn't take place with a close above the long algo within the last, in this case, 4 bars, and that's going to be a variable input that will exist. But in this particular case, you had the short setup, came through, beautiful hit of the target in this particular case, but as we pointed out with the boxes showing up here, and actually that's miscolored, this one should be a gold one because you're above 13.5, and the move of the orange below the -13. In fact, I'll just go ahead and recolor that. It should be gold. It's when this one is below that usually it's, I do it in the steel just to point out the differences between the strength of them. This is a great reversal, and you can use the long algo move above as your entry point, or just take it as an opportunity to enter near bottom. Likewise, same currents right here after we had the short setup right there. So DOC spread, but the cyan is above the 4 level. Right there, you can see where it says cyan. And you're above this 7.5 for the orange in this particular case, all the way above. And carried all the way through, hit the target. Then we got the signal that it was going to turn around, and beautiful, takes place right at the bottom of the move, 2363, and here we are at 76. So not only do you capture the full 12 points on the downside, it's another, well, in this particular case, from the 63 all the way to 76, another 13 to the upside, and it's just that easy. I mean, we can even see it on the 5K identical situation here. We ended up with the same short. Nothing mattered in between here. We had one potential warning right there, and all that meant to do was just to lower the stop to 3 points, and then it was just a matter of following it. And so nothing was taking place. We had another one happen right here, no issue because there's been no closes, and then it dipped down a little bit, and then finally pop. People thought, oh, okay, we're got to close above the long angle, but it wasn't until so when you get this signal, you could take it right at that point. I prefer when the steel moves below the 7.5 as the long, and that's what I had posted right back there. Where was that at? That's 2160, and so here we are at 2176, so another 16 points. So in this particular case, the short was 73, cover point was at 60, and then from 60 back to 76. So I don't know if you can get any better than that at this particular point. You can see that we've had some DOC spreads, and you say, okay, well, why weren't those shorts? You never achieved the +4. I'll raise it up there on the cyan at that particular point on the crossover. Here's another crossover right here. 375 is the best it could do, and right here, 1. So none of those were effective DOC trade considerations, and then there you go, right back below the red line again for the positive move that we're seeing at this particular point. So that's pretty much how clean it is, pretty straightforward from that standpoint. What you'll also find is that you don't see any of the MBIs or GAMs that don't qualify in there, but now if we scroll back, we can certainly find MBIs that come in place, and it colors them just for a set number of bars, and I put just a little I for the MBI right there underneath them so that you can see it, but it was the precursor to leading it. And so what's going to start to happen is as the trend colors are matched to those signals, which I'm hoping to have squared away in the next couple of days, and send out those updates as well, so that you'll be able to have that matching color configuration. And it's a simple enough configuration that it will supersede some of the more complicated setups in this. Will just make it easy to follow from a trade standpoint. I think extraordinarily effective. So as you can see already, just in pointing these out. And this was just a couple of the changes in incorporating now all of the what I call wrappers of the different indicators all exist within the one single paint bar, and they're also going to be incorporated into, in this case, the shakeout as well, so that you'll also get a mirror effect of the shakeout within these configurations. It'll be slightly different than what you're seeing currently, because it will respond a little bit earlier with the move up from the shakeout. So I mean, we go from the magenta where you're below the yellow line here, and then finally it starts to turn around. And so that was the early point right back here when it finally, the yellow had crossed above. But in this particular case, waiting for that steel dip back below. Not a bad way to go. Just alternatives, but keeps it very clean. And even if you're off, I mean, look at, even if you waited until the cross, which was all the way back up here of the cyan below the red, to effectively end the trade, you still had the opportunity to get in there. You had a secondary one where we dipped back below the red with the DOC here, so even a midway entry still possible. Where was that? It was all the way around 67, so 9 points from where we currently are at this particular point. Yes, getting overbought. These will be the retrace values, so yes, we're going to be coming back down to these levels again, right in that 68 range. So, but no point in assuming that's going to happen until we actually get a signal that will do so. Now that we're above the plus 15, there is one variation that you should be aware of. Normally you would not get the short setup will not activate if the magenta or red of the shakeout are above the 15 level, or one of them is above the 15 level, except for if the orange moves above plus 19. So if you get a major spike of the orange above the plus 19, then effectively you get a DOC spread. That would be a signal that could be taken short. Otherwise, we don't attack until the magenta and red are below the 15 warning line on the shakeout. So a couple little caveats in there, and it's not that they're necessarily exceptions, it's just that they improve chances of success. And there may be one or two instances where that will miss a short setup temporarily, but secondarily, you still have the short setup of where the cyan moves to plus 7.2 or greater, with orange above as well. And those particular shorts can happen in between what I call two separate tracks. You have the DOC spread, which is the cyan moving above the red as a one track where it's above the 4, that's a tradable track, and a non-tradable one would be like this crossover where it was only at the plus 2.47, in which case then it would then rely on a secondary short or long signal. It opens it up to a little bit more flexibility at that point. But it also gives you a warning too that you don't have a strong bias one way or another, other than the long algo or short algo leading, and that would then become the next variable as to which one has the most strength. But we'll continue to outline in detail more of these as the days go on. So I think the broader market view of these videos will still be there, but I'll be throwing in some of these added explanations and understandings and throw in examples so that you have a real visual context of what we're talking about, because it's a little bit more complicated to do it by written text versus seeing it actually in a live action and me putting these various boxes to give you the difference. You can see these that didn't have the steel move above the 13.5 line right there end up in the steel box, because it's just a warning and it lets you know, okay, you should just lower your stop so that you're prepared just in case. But they don't tend to have the same degree of success as the move of the steel all the way above the 13.5 with the orange coming below, and when the red is below the 13.5. It can still take place even when you're seeing them with the red at the higher zone, but this oversold tends to produce the strongest kind of return reaction. So those are the latest developments. Very exciting stuff moving forward in the next application. Once the paint bar colors are adjusted and we see entry and stop points, will be the strategy aspect, and then we'll be able to run a lot of the profit factors, and then be able to put in some of the variable adjustments that will allow you to change stop values and make inputs and do customizations based on time frames. So all in all, there you have it. Good way to start the month. As always, trade well. We'll talk again later.